All right, welcome everyone. Today we're diving into a fascinating financial report that breaks down all the action in the global markets for Wednesday, February 25th, 2026. Let's get right into it. So, the report really zeroes in on two major forces that were behind today's incredible performance. First, it looks like all that massive investment in AI is finally, really starting to pay off in a big way. And second, there was this huge sigh of relief around the globe as trade policies started to look a bit friendlier. Okay, let's unpack this.
First up, let's look at the hard numbers. We'll start with the U.S. markets, which absolutely surged today, with the tech sector really putting the pedal to the metal. And wow, just look at all that green on the screen. It was a fantastic day across the board. The Nasdaq and the Philadelphia Semiconductor Index totally led the charge, with some really impressive gains. We're talking over 1.4% and 1.6% respectively. The Dow and the S&P 500 also had a very solid day.
So you might be asking, what was the fuel for this fire? Well, it was a perfect storm of good news. The report points out that the big deal between Meta and AMD showed everyone that the AI hardware market is super healthy and competitive. And at the same time, the confirmation of a 10% tariff instead of a much-feared 15% meant that investors could finally breathe a sigh of relief.
Now, heading across the Atlantic, the story was just as positive. I mean, the UK's FTSE 100 actually hit a brand new all-time high. And you can see Germany's DAX and the broader U.S.Stock 50 also had some really significant rallies.
The analysis over there points to two main catalysts. First, you had some really strong earnings from the banks, especially HSBC, which gave a huge boost to the whole financial sector. But maybe even more important was the news that Eurozone inflation dropped to just 1.7%. That's a big deal, because it makes a future rate cut from the European Central Bank look much more likely. And that's really fueling a lot of optimism.
Okay, so that's the story of today, a really strong showing all around. But the big question is, right, where do we go from here? Well, let's see what the report's quantitative model is predicting for March.
For the US, the outlook is pretty bullish, to say the least. The model is actually targeting a level of 27,200 for the Nasdaq 100. That's a jump of over 7% from where we are now. And this is all being driven by the belief that the AI momentum is just going to keep rolling, especially after the very strong NVIDIA earnings report that came out right after the market closed today.
And it's not just the US that's looking good. The report is also pretty optimistic about key markets in Asia. It's pointing to those easing trade risks we talked about, plus some positive effects from domestic stimulus in China as major tailwinds. The model sees some serious upside here, especially for China's SSE composite, with a potential gain of almost 10%.
But if there's one market the report is really hammering home, it's this one. The analysis is projecting a potential surge of nearly 16% for South Korea's tech-heavy KOSDAQ index. The thinking is that we're about to see a major rotation of money into biotech and those all-important AI component stocks.
Okay, so forecasts are great, but how do you actually trade this? Well, the report gets into that too. It lays out three specific quantitative strategies based on its models, basically turning the forecast into an actionable playbook.
And these strategies are all designed to help manage risk while still capturing that upside potential. They're laid out with a clear logic, kind of moving from a really focused, sector-specific bet to a much broader, more diversified plan.
So the first idea is what's called a pair trade. It's pretty clever. The model suggests going long on NVIDIA, betting that its dominance in the data center space will continue, especially after those stellar earnings. At the same time, it advises a more cautious, neutral position on AMD. The goal is to profit from the performance gap between these two AI chip giants.
All right, strategy number 2 sounds super technical, but the idea behind it is actually pretty straightforward. It uses a model that's calculated an 82% chance that this bull market is going to keep on running. So, with such a high probability, the recommendation is simple: stay invested. It even suggests you could consider using a little bit of leverage as long as those key trend indicators stay positive.
And the final strategy is all about diversification. The key here is to align your portfolio with the bigger economic cycles. So the model puts 70% in tech to capture that main growth engine, but then it adds 20% in copper, which is basically a play on the rising demand for the physical infrastructure needed for AI, and then keeps 10% in cash as a nice defensive buffer.
So, when you pull it all together, what does it all mean? Well, the report argues that we're at what it calls a golden cross.
That's a point where the AI revolution is finally turning into real measurable economic productivity, and it's happening at the exact same time that some major policy worries are finally clearing up.
And the report sums this all up with a really powerful idea. Check out this quote. The core argument is that these two huge forces, the invisible hand of these tech cycles and the wisdom of crowds reflected in more stable policy, are finally working together. And that's creating this uniquely positive environment for the markets. And that, of course, leads to the final million-dollar question that the report leaves us with. The analysis suggests sticking with a buy-on-dip approach, but always keeping a close eye on risk. Is this surge the start of a new, sustained run? Or are we just seeing a temporary calm? What do you think comes next?